from the hotel asset class. I have a very eminent panel with me, starting with Sartaj Singh. He is the President and CEO of Embassy Hospitality. Rahul Chaudhary is the Chief Executive Director for CG Corp. Shantanu Nalavadi, he is the Managing Director for India RF, which is a joint venture of Bain Capital and Piramal Enterprises. And I have Shwetank Singh with me, who is the VP Development for InterGlobe Hotels. And I welcome all of you, and thanks a lot for your time. And I hope we're going to have an interesting session today in the interest of hotel investors. Rahul, starting with you. Firstly, congratulations for your latest acquisitions of Fairmont Hotels in Kenya. It's a great move, I must say that. Can you give some idea of what is the transaction all about? It happened pre-COVID or post-COVID?
First of all, thank you, Nandivardhan, for having me on this session. Of course, it's a difficult time, and it's important that all of us come together and share our views. And again, thank you so much for your wishes on the recent acquisition of the Fairmont Hotels in Kenya. That was actually an acquisition we did right before the COVID, pre-COVID. Now, some would say that the timing was perhaps bad because right after the acquisition, we came into the COVID situation. But I would think that it was a very good acquisition. And of course, it took a long time to conclude the transaction with Kingdom. And because we entered at a good pricing structure, I would say, we managed to hold through. We managed to hold through even during the COVID situation. And we are now already, apart from the fact that the property is closed at the moment due to the lockdown in Kenya, but our objective was to do a full cleanup of the entire hotel from the project perspective, also from the perspective of the costs. So I think we're sitting in a good position. I think we look at this as an opportunity, and this has been our business model ever since we came into the hospitality business 2 decades back.
Great. So Rahul, how's your India strategy shaping up for investment in Indian hotel in investment space?
Yeah, as you know, Nandivardhan, that we are partners and shareholders in Concept Hospitality, and obviously all our hotels were closed as soon as the lockdown came into play in India. But I was talking to my partner and CEO Suhail just a couple of days back, and he was telling me the good news that we have some of our hotels, almost 50% of our hotels, 50% meaning almost about 35 hotels already operational. By the end of July, that we see the rest of the hotels coming online as well. Now, in terms of our investment strategy for India, we are at the moment invested in the 4 safari lodges under Taj Safaris. And, in the past, we had also talked about raising a fund for distressed assets and stressed assets in the mid-market space. And fortunately or fortunately, we went a little bit slow, but I'm so happy. I mean, destiny has it so that I believe now is going to be the right time. After a quarter or so, you're going to see tons of stressed and distressed assets in the market, which will be available for investors to pick up at the right price. So we are already gearing up.
One minute, Rahul. Can I request all panelists to mute, please, apart from Rahul? So it's okay. Shwetank, thank you. Rahul, please go ahead.
Yeah. So I was just saying that now we are already embarking on a strategy for our fundraise so that we can have our gunpowder ready when the time is right. And I think that is going to be towards the end of the year. We are going to pursue our strategy for, again, the mid-market space. But I would also say that learning from COVID and how things are evolving so rapidly in the region as well as India specifically, our focus is also going to be a little bit more on the leisure and the wellness sector. Because we believe that people, and you can see every day your mailboxes are probably flooded with staycations, A new word altogether is emerging out there. People want to not stay in the cities while they've been confined to their homes. They want to go away to the nature. They want to go away to beach destinations and start caring for themselves, their well-being, the food habits. So definitely, I think this is the right time. I'm glad that we waited this far, and because I believe that the opportunities are only going to be more and more with coming with time.
So Rahul, in this particular thing, is it for you buy or it's going to be for the development? Even if you're looking leisure as an asset class, are you going to buy the operational assets in the India strategy? Is that the document says for you?
Yes, we will be looking at buying, but like I said, it will not be immediately. It will be perhaps after a quarter or so, because as we were discussing offline, that unfortunately the support and relief that we were looking for in India as well as in all the different countries that we are in, we've not gotten that support. And while there could be some holding capacity for some investors and owners for a short period of time, but the thread only goes that far. And after a period of time, I believe that is going to become even more difficult for hoteliers, and that is going to happen towards the end of the year. So I think our strategy would be to look at buying assets, but more distressed assets and brownfield assets. In terms of development, I will say that no, that's not our strategy at the moment. I would not like to look at field investments whatsoever. I mean, liquidity is scarce, capital is scarce. Apart from wanting to survive in some of your assets, you also have to allocate your capital judiciously into investments that are going to reap benefits. And in terms of exit, I would say that I don't think this is the right time for an investor to exit if you have the holding capacity. So my strategy would purely be to buy, and at the right price and at the right time, which I feel is going to happen after a quarter or so.
Thanks, Rahul. Sartaj, coming to you. What you think for you? What's your advice to the hotel investor? Whether it's time to buy or exit? If someone's sitting on the cash flow with the existing assets and they have the liquidity also available.
Nandivardhan, at best of time, there's always a mix of all three, right? Everybody's is probably building, looking at buying, and is always there's somebody exiting, not the same people. Then therefore, there's an opportunity to even buy. Speaking for Embassy Group, we are definitely in the build stage. We got nearly 1,200 keys under build, and we had reached a stage looking at the cycle that we were in the end of last year or the beginning of this year, where we're getting interested to look at some buy options. I think what the COVID has probably taught us as Embassy Group is that I think we should stick to our knitting. We understand the commercial space very well. Our hotels are being built in business parks to service the park and add value to the park. And I think we'll step off the buy element definitely and continue to build pipeline hotels and continue to prospect for our new business park to build hotels within our sort of tested business model. But I agree with Rahul. There will be opportunities to buy distress assets. So whenever somebody buys, there's obviously an exit also for somebody, right? So it's a combination of all three. If your hotels are being built to be commissioned in 2022, 2023, people should continue to build. If they haven't yet started, maybe they should watch the space for a few months more before biting the bullet. So that's where I would place Embassy's position, as well as my general take on where people should be.
Thanks, Sartaj. Thanks a lot for your inputs. Shwetank, coming to you. InterGlobe Hotels, largely you guys believe in development. You have a lot of supply coming up in your portfolio. A lot of your projects are under development. Do you think that this COVID-19, you're going to have a change in strategy in your future investments, or you're going to stick to your development route?
First of all, thank you, Nandi, for having me here. So from an InterGlobe perspective, just as a quick introduction to everyone, we are a joint venture which is backed by InterGlobe Enterprises as well as Accor. Quite unknown to a lot of people. We are very heavily invested in this space. We have about 23 hotels that we are committed to in India in one SPV. And in another one, we have 7. Total, we have 24 of these are operational and 6 are under development. We also have a fairly largish portfolio abroad. Internationally, we are very well spread in Europe. We have 12 hotels in Europe and 1 under construction in Australia. And actually, when we put in the total capital together, we are close to $1.5 billion in this space. So we are very heavily invested in it, and it is a family-owned business from an InterGlobe perspective. So we are in it for the long run. We are backed, as I just told you, by very very patient capital. So our strategies don't necessarily change with cycles. We are very very committed to our development plans, quite unlike the first two inputs that you got. We are more committed in the greenfield space. We have always found brownfield to be troublesome acquisitions from several different perspectives. So we do remain committed. We have of course had to slow down, unfortunately, because of the various lockdown situations. The sites were slowed down, but we have now opened in most locations other than Maharashtra properly, and we are going full steam ahead. So there is no immediate impression of slowing down in any way.
Thanks, Shwetank. Shantanu, coming to you. Do you think it's the right time for a fund like you to enter into hospitality asset class? Is it the best time?
Yeah, so Nandivardhan, thanks for inviting me onto this meeting. So just a quick introduction. We are a fund which is focused on Indian distress market and broadly investing in three broad buckets. It's industrials, it's export businesses where India has a cost advantage and is good in quality, and third is the domestic consumption story. So within the domestic consumption, in our view, obviously the whole hospitality segment is extremely attractive, and we've been looking at this segment for the last 12 months. And just like we just heard earlier, that we were lucky we did invest in this segment till date. And I think this is the right time for us to look at investments, primarily because the way we look at the industry and we've seen it is there are many assets, usually fragmented. There are obviously the large chains, but there are many single-owned hotel properties. And I think if you look at in the next 12 to 24 months, it's pretty obvious that people who have liquidity are going to survive, and those who don't have liquidity will eventually have to exit. And that's really what we call as a bullseye segment. So that's the segment that's what we are focusing on. I think within the hotel segment, our focus is on budget and so at 3 to 4 star, and largely because the growth there has been 12 to 15%, and the supply obviously has been reducing, and that's really going to be our focus starting in the quarter or so.
So Shantanu, how are you going to price the acquisition? Because in a normal market scenarios, you have a historical numbers. We talk about a replacement methodology, or on the basis of cash flow, we do it's a multiplier to the EBITs, and we derive to a valuation or weighted average. There are different methodologies we can explore. Now there's a situation where historical data might not be relevant for next 24 months. So it's a unique situation, once in a lifetime property, where you might not even rely on the historical data to that extent. So are you working on some other way of pricing the asset?
Yeah, so I think, as you know, fundamentally, we would have valued it on three bases: DCF, replacement cost, and earnings method. I think the replacement cost pretty much holds there now, so that's something we will continue to consider. And this is across sectors and including hotels. The way we are looking at it is, we really don't know how the curve is going to be, when the recovery will come back, or business will come back. People talk of U, V, W. I think our best take is, plan for the worst and ensure that, you have enough liquidity. And then when we look at assets, we would sort of look at it from that specs and say that if we had to buy into this asset, how much of liquidity we need to put in to survive and get the business back, how much of capex we need to invest for improvements and stuff like that, and then build based on our ability to get the best hotel managers to operate, what will be the EBITDA 2 to 3 years down the line. And once we know we have a range of those EBITDAs, we would then NPV those EBITDAs, what we call as a EBITDA multiple. If it's something like 12 times forward, then we would NPV that to today's day and time, and basically use that as a multiple to buy the asset. And obviously, once we take over, we'll ensure we have the liquidity and work on a turnaround to get the business back.
Thanks, Shantanu. Sartaj, coming back to you. What's your advice to the hotel investor? Which particular format to touch upon from the investment point of view in these markets? Budget, mid-segment, upper upscale, or luxury, or upscale?
Again, Nandivardhan, go with our experience. We believe a mix of mid-market and upscale is something that we are comfortable with. Again, it's very specific to Embassy and our experience, where we try and place a combination of these two classes within our larger business parks, and they cater to the two price points, uh, and therefore attracting sort of patronage at both the segments. If I were to make a general statement, I would say mid market is where I think the opportunity is much larger. It's quicker to build, the returns are faster, it's easier to fill up, more sure. Again, of course, it's all dependent on location. That's extremely important in any decision pertaining to a hotel. But that's the way I would look at mid market, upscale, and definitely if I was to take a standalone decision, then towards mid market.
Sartaj, Embassy has ventured into even a co-living and co-working formats, and you have a specialized teams available in your corporate office for that particular asset classes. Do you think that hotel investors, seasoned hotel investors, they might shift to these new asset classes and look towards that from a point of view of a better ROI? Is something like that is visible to you as well?
I think I mean, while they appear interlinked, and we as Embassy are probably spanning the entire spectrum of the asset classes that you mentioned. Each one of them has a place of its own in the product life cycle, right? I mean, if you look at the entire asset class, real estate asset class space, commercial is way ahead on the maturity side, and then you have co-working, which is ramping up. It's all about scale and positioning. And I think each one of them has a space of its own. Co-working is pretty much on the curve. Co-living is a new one, but I think from an investor point of view, what you need to look at is a long-term perspective for all these asset classes, right? And I think that's where it comes in, that each one of them has a space. As long as the developer concerned has a long-term approach to the business, he will find equity investment following the developer. There will be people to invest as long as it's a solid developer with a track record who has a long-term perspective. Each of these classes will have a position as we go forward. So we are, as I said, in all three, we are ahead of the curve, maximum, of course, on commercial, followed by co-working, and now we are seriously in the co-living space. We did consider in our internally whether there should be a bit of an overlap between co-living and hospitality, but I think we came to a decision, let's keep them separate. Although again, it comes down to our basic concept that each of our businesses sort of complements each other. So if you have a business park and you have two hotels in it, the co-living is not either or, right? It is and. You put it along the park, maybe not in a location which is as premium as putting the hotels, but within walking distance of the park, you've got a 500 key or 1,000 key co-living space coming up. It has a different market to address. So I think each one of them, and definitely co-working is a part of the park. I mean, we have WeWorks in each one of our parks. So I think it's the way Embassy's portfolio is working out. We all draw upon each other's strengths and complement each other, and there's a space for each one of them as you go down the curve.
Thanks, Sartaj, on this. Shwetank, coming back to you. Access to low-cost capital is one of the biggest challenge for the Indian hospitality industry. The bank loan structures are very different. They give lot shorter terms, and then moratorium is also limited, whereas the development cycle is anything from 4 to 5 years. Do you think if the industry get a status of infrastructure industry, if the hotel asset class get a status of infrastructure industry, the entire ballgame will change? Whether it's COVID or not COVID, we're going to have a different supply side altogether.
Yeah, I mean that Nandi is something that the industry has been chasing for a very, very long time, as you are aware. I think the way it currently stands, everything over 50 crores becomes an infrastructure status, and the industry has been chasing for even lesser, something around the 25 crore mark. So that's not the point. I think we have to see it more holistically. Certainly, an infrastructure status which would give the industry access to long-term term, low cost capital would be more than welcome. But what we also need to see is that the industry has been suffering overall from several other policy pains. And if I were to name a few, the whole approvals and license piece, which has been, talked about over and over again, continues to be an issue. Various forums will tell you that anywhere between 80 to 120 licenses are required to open a hotel, which is just crazy, just mind-boggling, just to comprehend. If you were to look at some of the parking norms, they're a joke. Today, if you want to build a hotel in Pune, for example, you have to create space for of all the things for bicycles and two-wheelers. We all know that most of the space that we create for parking goes underutilized or almost totally unutilized in hospitality. There is no input credit available in GST for the civil part of the construction cost. Which is also crazy because it adds about 8 to 10% to the cost. So, we have done a study, very detailed study on all the various inefficiencies that the system has built within the industry over a period of time. And our calculations tell us that anywhere between 25 and 30% of the cost is inefficient cost. And when you take all of that into consideration, clearly you're putting the whole industry in a very, very difficult state. So, infrastructure status will help is the answer, but that's just one of the problems. There are several others that we need to sort out. I think given the COVID situation, the government, it's a great time for the government to actually bring more, policy reforms in the sector.
I hope great bodies are listening to you, and probably together we all can make some difference at the federal government. Shantu, coming back to you, in this entire COVID-19, there's a lot of crisis. Everyone is talking about distress and all. What's the silver lining you think it's there for you as an investor, as a potential investor, if I may say so?
Sorry, I couldn't hear you. Could you repeat that, please?
I'm audible now?
Yeah, better now. Thank you.
Okay. I'm saying that in this crisis time, everyone is talking about distress, that distress is going to come and all that. But distress also comes with certain baggages attached to it. The asset will be in a terrible shape and there will be its own challenges, statutory duties and all that. But still, in spite of all these challenges, what's the silver lining you see in this COVID-19 scenario for you if as a potential hotel investor?
Yeah, I think the fundamental point, and I'm specifically talking of the segment we are focused on, which is, I think you heard earlier in this call that the budget segment looks very attractive and interesting. So if you look at that segment by itself, we do feel that, people do talk about lesser business travel and various other theories are floating around, but eventually people will travel. And I think from that particular segment, when we look at across all the tiers, the demand supply, what we call as a mismatch or a gap, I think it's the most attractive in the budget segment because you're seeing demand. We have seen last 4-5 years where demand has grown at anywhere between 12 to 15%, and the supply is constrained. So and it's reducing year on year. So our view is that if we get to a right asset in the right micro market, and obviously get it with the right spec. So obviously that's very, very important. I think Shwetank said that that's one of the problems they have seen in existing hotels, so that they prefer doing greenfield. So that's something is a big focus for us. And if you buy these and you get the right manager to operate it, we believe that we would be able to actually get good proceeds out of these businesses and these particular assets over the next 4 to 5 years.
So Shantanu, as a fund, you always look for exit after 7 to 8 years or 5 years, depend from fund to fund. What is going to be the exit strategy if you tomorrow build a portfolio of hotels? It's going to be through IPO route or through REIT or some other routes you are evaluating.
So I think fundamentally, if the asset is doing well, we do think that there will be 3 to 4 options for us to exit. One obviously is the IPO, and obviously you've seen Lemon Tree and Chalet Hotels, which is listed, and you're very close to the COVID the lockdown with COVID hadn't come up, Sami would have got listed also. Okay, so I think that's a viable option which one is looking at. I think the second is, there is REIT, which is more and more as a possible option. You got also long-term investors like the pension funds, the sovereign funds, who are looking to buy these assets. We've seen a recent trade where Brookfield bought Leela. So those options, including and as a segment, financial investors continue to be a segment eventually to exit, in 4 to 5 years from now.
And Shantanu, don't forget us. We are also potential buyers.
Yeah, 36 also. That's right. That's right.
You're looking for deal making at this platform only.
Yeah, absolutely. All the time.
Coming to you, Shantanu. Shwetank, coming to you. Do you think you're going to turn your strategies towards from a standalone hotel to mixed-use development as well? Is there a possibility in your entire format of things?
So that's a very interesting question, a question that we keep grappling with. We, of course, have very successful people in Sartaj who's doing it very, very well as a mixed use. But we are, as a company, we are a bit slow on the take, first of all. And the second thing that's there is that we are a bit averse to new experiments. But if I am to honestly look at our portfolio currently, one of the saviors has been the big, real estate space, that commercial space that we have at Ibis Dial, because we have had rentals coming from Kotak Bank all throughout this very difficult period when our revenues were so strained. So principally we believe in it. We believe that a mixed use is very, very helpful. But when you put a mixed use on top of a company that is minded to go greenfield broadly, so that we can ensure compliance, valuation, and all this, that, and other, we are looking at very substantial investments going into a particular location. Not that we are averse to it, but we do have to consider it very, very deeply before we take a call on it. So short answer is we haven't done it in as much detail and with as much success as some of the others have, but it's something that's always on our table as a consideration.
Shwetank, your majority of the portfolio is of a business hotels. Only I think Goa is the market where you have, I will classify under leisure. Rest all are your business hotels. Post COVID-19, do you think it's a time for the organization to rethink on the leisure side also, which was not a priority, I think, before COVID-19?
So Nandi, we are not averse to leisure. It's not that we are averse to leisure. It's just that Ibis as a brand is more suitable to a business traveler, because as soon as you start to consider more than 2 adult guests in a room, typically an Indian family would have 3 or 4, the room size becomes a bit of a struggle. We have tried various means. So in Jaipur, for example, we have put in a 3rd bed, where the sofa converts into a bed. So we have made some attempts at going leisure, but quite frankly, we haven't been very, very successful with it. So as I said, we are not averse to leisure. We are very, very open to it. But right now, the strategy that drives us is that we want to be in locations which have clear and present demand, number one, even though we end up paying a premium for it. And the second is that we want to be in tier 1 locations where we can put in big boxes. Now, it is by virtue of that kind of a restriction that we put on us that we end up in business locations. So it's more by default rather than by design.
Thanks, Shwetank. Rahul, coming back to you, which are the top 5 markets for you for India strategy point of view, where you will be open for evaluating the transactions?
Like I said, you can hear me, right, Nandivardhan?
Yeah.
I can hear you.
Okay. No, like I said that although our strategy has always been to focus on the mid-market segment, of course, those would be in either second-tier locations in first-tier cities or first-tier locations in second-tier cities. But I think our focus is also going to be a little bit more in terms of the leisure space, as I mentioned. So it would definitely be, I would say, I mean, lot of places that we can think about is in Northeast also, I believe, has a huge potential in terms of first mover advantage. That market is still quite less untapped in terms of the rest of the geography of the country. You see, I think instead of talking about a specific location, Nandivardhan, I think that locations that haven't been tapped yet are the locations that will probably work the most. For example, I will give you an example in terms of our safari businesses. Everyone wanted to be in your Kanha, Bandhavgarh, Corbett, Gir, Ranthambore, but now you suddenly see the emergence of Tadoba. Tadoba is really coming up. So that's just one of the examples. I would think that the roads less traveled destinations will probably be locations that we would definitely look at as well, due to the first mover advantage, plus our focus in that segment. But having said that, we would not keep our eyes away from also the mid-market space, which is going to be available in the market as well.
Thanks, Ram. So, Taj, one more question for you. Now, if someone, a hotel developer, someone who is at an initial stage, probably 5-10% of the construction work has been completed till now, he can put the project on hold. He can sustain that. Someone who's closer to completion, he's sorted with financial closures, he will complete the project. Understood. But someone who is stuck in between, maybe 40-50% of the construction work is done. What do you think? What he need to do in these markets?
I mean, again, Nandivardhan, 40 to 50% complete would really mean that you could probably finish the hotel sometime in end 2021 or mid 2022. And I think it's then in that situation, the person should continue to build and get the hotels ready, because I believe in an 18 to 24 month space, we should be back in business. We should have crossed the 50% occupancy, if not 60% by that point of time. All the pundits are, pointing towards that, unless we have a second wave and all that. That it's the whole. I mean, that is the uncertainty bit of it. But if you're right at 40 to 50%, you must continue to build and get the hotels ready to be on time. But while you do that, you must look at the new realities of what what the customer will seek in terms of product spec. How do you bring in the safety norms? How do you have touchless check-ins? Maybe you change the format of your restaurants to have less buffet spaces. I mean, I think all those quick modulations should be done to the design element of the hotel, if you can do that. But at 50%, I don't think you have an option. I think you should build and get ready to launch with a new positioning, which is more with the times than the old class of hotels.
Sartaj, last year, Embassy launched very successfully REIT for your office business. It was one of the most successful and very encouraging for the market. What's your view on the hotel REIT? Do we see any such thing coming up from your side in the near future?
Now, here I speak really for Embassy Group and not the Embassy REIT, which is a separately listed company. But as a group, yes, we had a long-term vision, and we still probably have a long-term vision for a hotel-specific REIT, which may get pushed a few years. But there are various options in that also, Nandivardhan, is that actually as the REITs come up and developers having hotels already in place, like Embassy can actually put some of their hotel assets into the commercial REITs also. Very successfully, we did that. Alternatively, another possibility is, of course, this is all about making sure you've got scale, you've got geographical presence and a portfolio. That's when the REIT really makes sense. But one other option that's possibly as a business model can happen is if it's private equity led and you bring in hotel assets of different developers, like-minded developers, into a hotel REIT. So, these are the few possibilities. But to answer your question, I don't think it's in the next 2 to 3 years we would be looking at a hotel REIT. It would be in the 5 to 7 year sort of spectrum. But more importantly, one of the models that I think would work is that you will get private equity-led hotel-specific REIT, which collapses assets which are from different like-minded developers who really want to get into a hotel REIT. It'll give you scale, presence, and portfolio.
Thanks so much. Shantanu, coming back to you. You're evaluating hotel transactions from last 3 to 4 quarters, and you have a fair understanding on what type of deal flow is there available in the market. What do you think? How much correction in the prices we can expect from the pre-COVID scenario to now? or maybe in next 3 to 4 months when the things are better cleared up, there's more accessibility to travel, because right now there's a lot of restrictions, we really can't move. But what type of expectations you have as a fund manager that the transaction which was available at X before COVID, that will be available now at a different, what type of drop you are expecting?
So I think, to be honest, we are already seeing some of those deals which came to us earlier, pre-COVID. We're already seeing a correction. So just to give a sense, we are seeing a 15% drop in the ask from their end before we start the negotiations. But I think, the way we are looking at it is, we are holding it out because I don't think this is a time to do the deal. We are giving it a couple of more months. And I think, as the months pass, there'll be further clarity in terms of the recovery path. And I think if the recovery path is going to be longer, then like I told you earlier, how we evaluate the deals and the valuation, there will be further discounts we'll have to put into it. I also think that, right now, because there's moratorium, there's not that much of stress on the cash flows. Of course, people have to pay for the fixed cost and various other things, so there is a burn to that extent. But as the moratorium lifts, you certainly see more companies coming out. So if you ask me, my expectation would be pre-COVID to now, there should be at least a 20 to 25% correction on the prices.
Thanks, Shantanu. Shwetank, you handle asset management as well for the InterGlobe Hotels. What exactly you think from the asset management point of view, a hotel owners like you need to do to enhance the ROI in these tough times, to make sure that, because everyone is talking probably next 2 to 3 quarters going to be gross operating loss. We might not see the green lines at all. What's your view? How's the P&L going to look like for you and on the asset manager rights?
It's a very difficult time for an asset manager, Nandi, right now, because of course revenues are very stretched. So very early on, what we did was we quite like a lot of others, we decided that we would just go on a full throttle on cash conservation to begin with. So we drew up simple scenarios of what our cash burn would be should there be zero revenue for a quarter. Once we had established that, we knew that at that rate, what was the fixed cost hitting us. We are one of the few companies who have gone very conservative on the salary side. We have not really given anybody a large cut. We have been very fair to everyone. We have actually not let go any employee as well. So from that perspective, once we had established what our cash burn would be, our next focus was how do we maximize the revenue streams that we could get during these times. And there was an opportunity that we identified. We were one of the first ones to identify the whole quarantine opportunity. Our IBIS at Delhi airport was one of the first ones who partnered with the government to make these rooms available. Of course, since then a lot of other hotels came on board, but the advantage that we got out of it is that in several cities, in Mumbai, in airport, in Navi Mumbai, in Chennai, in several of the cities, we are now actually supporting the government by providing rooms to both hospital staffers or our corona warriors, as well as for quarantine facilities. We even were taking on COVID positive patients in our Navi Mumbai hotel. In fact, quite unfortunately, as a part of that exercise, even our general manager got infected there, but we soldiered on because we decided that there was a debt that we wanted to pay back to the society from that perspective. So we did bring in some revenue, which has helped, because once you have established your cash burn at zero revenue, everything that comes from the top is actually a profit. So from that perspective, we started to work on it. We are in gross operating losses, as you say, but that's a very small number, a number that we are more than happy to accept in the current state. Of course, nobody knows, as other panelists have pointed, how long this will go on. But in the current state, we are in a good space, as good a space as we can be from that perspective. Going forward, of course, our main focus is on the PR and marketing side. We really want to leave some good footprints in the sand about what we stand for. We want to establish very clearly in the market that we are a company which holds compliance at the highest level. We would continue to focus on health and hygiene, and through Accor, our partners, who were one of the first ones to actually get onto the health and hygiene bandwagon amongst the 4 or 5 large operators of the world. They have signed up with a company called Bureau Veritas. So we are working towards, helping the consumer gain back some of their battered confidence. We have put in place easily cancelable offers. Of course, we do understand that in terms of travel sentiments returning, it will be possibly intrastate, intracity first, moving on to intercity, interstate, and then, of course, international comes last. But from that perspective, we are more than ready. We are marketing from that perspective. We are offering staycations to people. To come in and stay with us. So we are working on our best. We are seeing some of the business sentiment returning very interestingly, and actually Mumbai is one of the leaders in that. We have actually people knocking down our doors for Mumbai airport. They want to come in as soon as the lockdown opens. So there is some good traction there. We also have some interesting cases in Kochi, for example. A lot of shipping companies which are signing out and signing in because it was one of the ports that is open. So we do have some revenue coming in from Kochi, which is very helpful. We have some companies working, giving some of their employees places to work from within some of our hotels. So we have been lucky from that perspective as well, that we have had that business. So, as I said, overall, we are in as good a place as we can be. Moving forward, we need to work on improving consumer sentiment, and of course continue to cut down on all costs which are inefficiencies within the business. And therefore, we just ride the storm. We are not changing any of our long-term strategies. We believe it's a very short-term situation which will correct itself pretty soon. It could be 6 months, it could be 3 months, anybody's guess, but we don't think it's going to be a very long-term situation. And thankfully, we are in the money around this time. So we are in a good place.
Thanks, Shwetank. Sartaj, coming to you. The owners who are over-leveraged right now, who are just bearing, the handle pre-COVID, they're just making ends to meet in terms of they paying installments to the banks. Now the situation is going to be probably terrible for them for next 3 to 4 quarters. And banks post-moratorium of this relaxation of 6 months, I don't think are going to have a very soft view on that unless there's a push from the RBI side or from the federal government. What's your advice to those hotel owners, how they should deal with this particular situation?
That's a difficult one for me, Nandivardhan, because it's not a situation which we fortunately face. But I suppose the only way they can probably go is to go back to the banking system and seek some kind of a holiday if they're already stuck in it, or as Shantanu would be happy to see if he can buy them. I mean, they have to take a call on where they are, but that's the reality on the ground. Nobody's going to come and bail them out. Either their banker will do it, or the promoter will put in some more, or somebody will buy them out. So it's a difficult situation given the way, unfortunately, the whole scenario is played out. Our sector has got no support from anywhere. Everybody was looking forward to it. We were throwing the employment numbers. We were, talking of investments. We were talking of infrastructure, but that doesn't come our way. And that's, I think, the biggest learning from this is we got to get our act together as an industry and get some kind of recognition somewhere to be considered as serious players. And I think the biggest player that we have is employment. Nobody sort of realizes that we, to an educated, unemployed person in this country, the hospitality industry and associated industry like travel and restaurants and, are really great absorbers of people in a young age group for coming out of college and wanting to work. And our whole system has just overlooked that, and we're pretty much grappling in the dark. So it's a very unfortunate situation, but I don't think there are easy answers to this at all.
Okay, we are at the last leg of this session because only 60 seconds is left to me. Shantanu, to start with you. For you, is it a build or buy? And after that, please give your concluding remarks.
It's buy, and I think the opportunity is very, very attractive at this stage. It was attractive pre-COVID. I think post-COVID, especially once the monitoring plays out, you'll see a lot of deals in the pipeline. So we remain focused on that.
Thanks, Shantanu. Shwetank, build, buy, or exit for you?
Certainly continue to build. We are too far exposed into this to make a correction at this stage. My only remark to the rest of the industry, the investors in the industry, would be that, please ride the wave if you can, unless everybody has their own pressures. So I won't get into that. But please don't change your long-term strategy because there is a minor blip on the road. I mean, we'll all cross it together. It shouldn't be such a big deal. Thank you.
Thanks, Shwetank. Sartaj, build, buy, or exit?
I think it's pretty obvious. Build at the right place in terms of location, build mixed use, build mid-scale and upscale.
And any advice to the hotel investors?
Well, it's a long-term play, right? You have to have the gut for it. You got to have the vision for it. Hotels are cyclical. You got to have, as I said, a long-term play. If you got the guts to do it, it's a good place to be in. Once you hit 70% occupancy, decent ARRs, it's got good profitability, good returns. So as Shwetank said, you got to ride the wave. I don't think it's a minor blip; it's a big blip, Shwetank. But we have to ride it out. But it's a long-term play. Hotel is
No,
not.
what I meant, Sartaj, was a blip from a long-term strategy perspective. Of course, it's not a minor one; it's still a big one, but
So I
but from a
think
long-term
we have to have
strategy
a long-term
perspective.
vision for this space. It's not short-termism. It's not, as they call, return on ego. All those guys who are building hotels for the fun of it, just because they had some cash, or their second generation wanted their own hotels, they are in trouble. And Shantanu should be looking at those with a keen eye.
Great, superb. Thank you, gentlemen.
I agree with you that
Amazing
it's
session.
not a short term, it's a long term.
Sure. Thanks a lot, gentlemen, for
Thank you.
such a great session. I must say, in the chat section, people are really passing very good compliments to all of you for such a great insights. Thanks a lot once again. Thank you, Sartaj. Thank you, Shwetank. Thank you, Shantanu, for your time and valuable insights.
Thank you.
Looking forward to many more webinars in near future. Thanks a lot for all help.
Thank you.
Thank you,
Have a great
everybody.
evening.
Bye.
Have a good day. Bye. 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 Bye.
Cheers.